RWA, behind this kind of boring 3 letters, is actually a massive power shift, all about trust. A few years ago when we were chatting about RWAs, a ton of people still thought it was just some vague, pie in the sky narrative, right? But now in 2026, the whole wind has completely changed. Today's RWA is no longer some fringe experiment in DeFi. It's become the main course of the entire global financial system. By the end of last year, the on-chain RWA market size, not even counting stablecoins, had already smashed through $36 billion, with institutional locked value topping $24 billion. This growth speed is even crazier than early DeFi days. So why is the explosion? Because that regulatory ceiling finally turned into a welcome door opener. Look at the EU, the MiCA law. It's fully live now. So one license lets you roll across all 27 countries without a hitch. Same story in the US. Once the Genius Act and Clarity Act, they get signed, compliant stablecoins are officially not securities anymore. Most importantly, the US Treasury has even started recognizing crypto mixers for legit privacy uses in corporate payments. It's like we used to be groping around in a dark alley, but now all the streetlights are on and even the big trucks from traditional finance are driving straight in. And let's talk about the gold standard in tokenization. BlackRock fund, BuILD. It's no longer just hanging out on Ethereum. It's now live on major chains like Aptos, Arbitrum, and Polygon too. By the start of this year, its market value has already topped $517 million, making it the biggest tokenized money market fund on public chains. And our familiar Ondo Finance too. It's now the world's largest tokenized treasury provider, with a TVL blasting past $2.5 billion. And what gets me most pumped is that Ondo has already filed with the SEC. So regular folks like us, they might soon trade more stocks like Tesla or Apple directly on-chain. And these would be fully compliant trades that meet SEC reporting requirements already. But I gotta throw a little cold water. RWA isn't all just free money. Take that RealT real estate tokenization case in Detroit last year. City officials sued outright, saying the 400 plus properties behind the tokens had broken heating, leaks, and a pile of violations. The court even ruled that rent collection was banned until the properties met code. This hard lesson shows us that on-chain records don't equal absolute legal safety if the underlying asset goes bad. Your token's cash flow can get cut off in a flash. That's the real world after all, real world assets. But the good thing is that RWAs have now evolved into true institutional grade infrastructure. Networks like Plume, built specifically as a layer 2 for RWAs, they have already attracted 280,000 holders. Even AI agents are jumping in. Your AI assistant could soon automatically invest half your money in US Treasury funds, 20% in high-rated real estate, and the rest in private credit based on your taste, giving you real zero-click investing. So yeah, my final advice, it is that 2026 will be the year RWA truly says goodbye to storytelling and shifts to checking real fundamentals. Even though the bar is way lower now, and you can buy global high-yield treasuries or fractional stocks right from your phone, still always check the underlying asset, as I was saying, and try to stick to compliant exchanges and top-tier institutions, of course, because it's just the beginning, so it's like the Far West. Crypto tech has been promising to change the world for years, and today is no longer a fantasy. It's a 24/7 programmable global capital market, and I kinda like that. What do you think? Would you turn some of your spare cash into these on-chain US Treasury tokens? If there are some US stocks you are eyeing, drop your thoughts in the comments and let's keep chatting about all that because yeah, it's just the beginning. I'm Cédric and I'll see you in the next one.